Imagine for a moment that you've been around in crypto since the early days of DeFi. Back in 2017 and 2018, when the industry was still fumbling with basic smart contracts and the first lending protocols, one project quietly stood apart: MakerDAO. It wasn't chasing meme hype, it wasn't offering wild APRs that collapsed overnight. It was trying to do something almost boring but world-changing. MakerDAO wanted to give crypto a stable foundation. Out of that vision came DAI, the world's first decentralized stablecoin that actually worked. For years, DAI became the backbone of decentralized finance. If you wanted to borrow, lend, farm, or simply hold something stable without touching a bank, you used DAI. But here's the thing: crypto doesn't stay still. The space evolves, and even the pioneers need to reinvent themselves. That's where the story of Sky begins. You might have heard the name recently, and you might have wondered, what happened to MakerDAO? Did they disappear? Did they sell out? No. What actually happened is far more interesting. MakerDAO transformed, and in that transformation, it set the stage for what could be the next big leap forward in decentralized finance. The rebrand to Sky is not just a logo swap or a marketing stunt. It's part of something much bigger, something the Maker team had been quietly working on for years under what they called the Endgame Plan. And the purpose of this endgame was simple but ambitious: to make decentralized finance simpler, more stable, and more accessible for everyone, while ensuring governance wasn't just controlled by a handful of whales. So why the name Sky? Think about it. MakerDAO as a name carried weight in crypto circles, but it also sounded technical and maybe even intimidating for newcomers. DAO, Maker, collateralized debt positions. Not exactly friendly language for someone new to DeFi. But Sky? That's a word anyone can grasp. It's open, it's limitless, it's approachable. The new name reflects a protocol that wants to reach far beyond its hardcore DeFi roots and bring in the next generation of users. And with the name change came major upgrades. DAI didn't disappear, and it evolved into USDS, a new stablecoin designed to be more robust and user-friendly. The old governance token, MKR, didn't vanish either. It transformed into Sky with a 1/24,000 upgrade ratio. Why such a drastic redenomination? To democratize governance. Under MKR, one token was incredibly expensive, meaning only big holders could realistically have a voice. With Sky, suddenly more people can participate in shaping the protocol's future. But Sky isn't just about token upgrades. The project is introducing a whole new layer of features: the Sky savings rate, which evolves from the DAI savings rate; Sky token rewards, which let users earn Sky by participating in the ecosystem; and something called Sky Stars, independent semi-autonomous projects that live under the Sky umbrella, each with their own governance and token models. This structure is meant to supercharge innovation while keeping the protocol decentralized. Now, here's the important question: why should anyone outside the crypto bubble care? The truth is, stablecoins are the lifeblood of crypto. They're the bridge between traditional finance and the blockchain economy. And yet most stablecoins today are centralized, heavily dependent on banks, and at the mercy of regulators. If USDC or USDT freeze accounts, the user has no recourse. That's the danger of building a decentralized world on centralized money. Stick around, because by the end, you'll understand why this rebrand could be one of the most important turning points in the history of decentralized finance. To understand Sky, you first have to understand the journey of MakerDAO. Picture the crypto landscape back in 2017. Ethereum had only been around for a couple of years. Bitcoin was climbing toward $20,000 for the first time, and most of the world still thought crypto was a fringe experiment. In that chaos, MakerDAO quietly launched something that would change DeFi forever: DAI, the first decentralized, crypto-collateralized stablecoin. The idea was revolutionary. Up until then, if you wanted stability in crypto, you had to rely on centralized players like Tether or exchanges. But DAI flipped the script. Instead of trusting a company to hold dollars in a bank, you could trust code and collateral. You'd lock up ETH in a smart contract, and out came DAI. A digital dollar backed not by banks, but by crypto itself. For years, DAI became the cornerstone of decentralized finance. It powered lending protocols, decentralized exchanges, and yield farms. In fact, if you trace the growth of DeFi back to 2020's DeFi summer, you'll see that DAI was everywhere. It wasn't flashy, but it was reliable, and that reliability made it the beating heart of the ecosystem. But here's the thing about innovation. What works today won't necessarily work tomorrow. As DeFi matured, cracks started to show in MakerDAO's structure. Governance was dominated by a handful of large MKR holders, leaving everyday participants feeling powerless. Complexity piled up, making it harder for newcomers to understand how the system worked. And the growth of centralized stablecoins like USDC, which started backing a significant portion of DAI itself, raised uncomfortable questions about whether MakerDAO was truly decentralized anymore. That's when Rune Christensen, MakerDAO's founder, introduced a bold idea: the Endgame Plan. It was his blueprint for how MakerDAO could evolve into something more sustainable, more decentralized, and more accessible. The endgame wasn't just about tweaking mechanics. It was about fundamentally rethinking how the protocol operated, from governance to branding. One of the biggest issues Endgame aimed to solve was governance centralization. Under MKR, governance felt like a gated club. The token was expensive, so only wealthy whales had meaningful voting power. The endgame proposed redenominating MKR into a much larger supply of tokens, making governance more democratic. That proposal became reality with the launch of SKY, where one MKR now equals 24,000 SKY tokens. Suddenly, the doors to governance widened, allowing more users to participate without needing to buy an entire MKR just to matter. Another key part of the endgame was accessibility. MakerDAO was powerful, but it wasn't easy to use. Most DeFi newcomers found the interface clunky and intimidating. Endgame's solution was to rebrand, simplify, and create a platform that felt less like a research paper and more like an app people could actually use. Thus, Sky. Money was born a cleaner, friendlier front end for what had been MakerDAO's complex back end. But perhaps the most ambitious piece of the endgame was the creation of Sky Stars. Think of them as specialized, independent sub-projects under the Sky umbrella. Each star would have its own governance token, treasury, and mission, from lending to trading to new forms of yield generation. This modular structure was designed to foster rapid innovation, without bogging down the core protocol in endless debates. The rebrand to Sky was the public face of all these changes. It signaled to the world, MakerDAO isn't stuck in the past. It's evolving. It's preparing for the future of DeFi. So what exactly is Sky? If you strip away the branding, the history, the drama, what you're left with is a new ecosystem built on the bones of MakerDAO, but designed to go further. At its heart, Sky is trying to answer one question: how do we make DeFi accessible, stable, and meaningful for the next wave of users? The simplest way to think of Sky is this: it's the upgraded, reimagined version of MakerDAO with two key tokens at the center: USDS, the stablecoin, and Sky, the governance token. Let's start with USDS. This is the successor to DAI, the token that first put decentralized stablecoins on the map. USDS works much the same way. It's pegged to the US dollar and backed by collateralized crypto assets. But the system around it has been streamlined and modernized. If you already hold DAI, you can upgrade it 1.1 into USDS. The point isn't to erase DAI, but to evolve it into something more resilient, more liquid, and easier to integrate across platforms. Next is SKY, the token that replaced MKR. As we covered earlier, the upgrade ratio was dramatic. One MKR can be swapped for 24,000 SKY. Why such a huge redenomination? To democratize governance. Under the old system, MKR's high price meant only large holders had a real say. Now, with SKY, smaller participants can take part in governance, casting votes and helping shape the protocol's future. It's not just a technical change, it's a symbolic shift toward accessibility. MakerDAO was often criticized for being intimidating. Its interfaces were clunky, its terminology dense, and its processes confusing for newcomers. Sky aims to solve that by making things as seamless as possible. Take the Sky savings rate. In the old days, you had the DAI savings rate. It worked, but it wasn't widely adopted outside of hardcore DeFi circles. Now, with SSR, USDS holders can easily stake their tokens and earn yield in the form of more USDS. No minimum deposit, flexible withdrawals, and an interface designed to be approachable, even for someone who's never touched DeFi before. This is a small but crucial part of making stablecoins not just useful, but rewarding to hold. Another big feature is Sky Token Rewards. By supplying USDS to the rewards module, users can earn SKY tokens over time. It's simple, non-custodial, and requires no minimum balance. The rate of rewards adjusts dynamically based on market factors, but the idea is clear. If you contribute to the ecosystem, you share in its upside. This kind of mechanism both incentivizes adoption and spreads token distribution more widely. Sky also introduces activation and sealed activation, two new reward systems for Sky holders. With activation, you can supply SkyEye tokens to earn additional rewards in USDS or SkyStar tokens. Sealed activation takes it further by locking your tokens. You can earn higher rewards while still delegating your governance rights. The twist? There's an exit fee if you unseal early, which is meant to encourage long-term commitment. These mechanisms might sound complicated, but they represent an important truth. Sky is trying to balance flexibility with loyalty, short-term liquidity with long-term governance. And then there's Sky Stars. If you imagine the Sky protocol as a solar system, the stars are its planets. Independent, specialized projects orbiting the same core. Each star has its own governance token, treasury, and mission. The first one, Spark, is already a powerhouse in DeFi lending, with billions locked. But the real vision is for dozens, maybe even hundreds, of stars to emerge, each tackling different niches in trading, lending, insurance, or other areas of finance. This modularity means Sky can innovate rapidly without bogging down its core governance in endless debates. All of this lives under a guiding framework called the Sky Atlas, a living document that evolves with governance. It lays out the rules, the principles, and the boundaries of the ecosystem, ensuring that as stars multiply and features expand, there's still cohesion. It's like a constitution, but one that can be rewritten as the community learns and adapts. Put simply, Sky isn't just a rebrand, it's a redesign. It's trying to take the lessons of MakerDAO, the good and the bad, and build something more accessible, more engaging, and more future-proof. It's stablecoins with rewards, governance with reach, and innovation with structure. The question is, will it work? That depends not just on the technology, but on the people who use it. The first thing that stands out about SKY is its redenomination. One MKR token can be exchanged for 24,000 SKY. At first glance, that might look like an arbitrary number, but it's deeply intentional. By splitting each MKR into thousands of SKY tokens, the protocol is lowering the barrier to entry. Suddenly, you don't need to hold an expensive token to have a say. Instead, you can own a smaller slice and still meaningfully participate. It's a psychological shift as much as it is a technical one. In governance, perception matters. A token that feels within reach has the power to invite more people into the process. But it's not just about numbers, it's about voice. Sky's system ensures that governance is more accessible and more distributed. Token holders can propose changes, vote on parameters, and shape the ecosystem. They decide on things like collateral requirements for USDS, changes to reward modules, and even which new Sky Stars get the green light. The goal is not to centralize decision-making in the hands of a few insiders, but to let the community genuinely steer the direction of the protocol. Still, there's a catch. Governance can be messy. Too much decentralization and decisions stall. Too little and the whole system becomes a puppet show. That's where Sky's governance design comes in. Alongside token voting, there are mechanisms like activation and sealed activation, which encourage long-term alignment rather than short-term speculation. With activation, SkyEye holders can supply their tokens to earn rewards. This doesn't just incentivize holding, it ties governance participation to actual economic benefit. If you're invested in the system's future, you're rewarded for staying engaged. Sealed activation goes further. By locking your SKY or even legacy MKR tokens, you can earn greater rewards, including USDS and SkyStar tokens. At the same time, you keep your governance rights active, meaning your voice in decision-making isn't lost. The trade-off is flexibility. Unsealing comes with an exit fee. It's a clever design choice, rewarding patience and punishing flakiness while still respecting the principle of choice. These systems reveal something important about Sky's approach. Governance isn't just about votes, it's about alignment. If you want a protocol to last decades, you need participants who think long-term, not just short-term speculators flipping tokens on an exchange. Of course, none of this works if governance is too opaque or confusing. That's why Sky also introduced the Sky Atlas. Think of it as the rulebook of the ecosystem. It lays out how governance works, what responsibilities token holders have, and how decisions are implemented. But unlike a constitution carved in stone, the Atlas evolves. Token holders can propose amendments, refine structures, and adapt to changing circumstances. It's a living framework designed to balance stability with adaptability. And this is where the heart of the matter lies. Sky is trying to build a system where users aren't just passive customers, but active citizens of a financial ecosystem. Your tokens aren't just numbers on a screen. They're votes, responsibilities, and claims to the future direction of the protocol. Is this perfect? No. There are still risks of centralization, especially in the early stages when large holders dominate supply. But the architecture is built to expand participation over time. By democratizing token supply, incentivizing long-term staking, and creating transparent governance structures, Sky is at least acknowledging the flaws of its predecessor and trying to correct them. In the end, governance in Sky is about more than technical mechanics. It's about trust. Do people believe their votes matter? Do they feel that participating is worth their time? If the answer is yes, then Sky might just succeed in creating a governance system that's both fair and functional. Something DeFi has been chasing since the beginning. The first milestone was reintroducing the ecosystem under a new banner with new tokens. The token upgrades signaled the beginning of Sky's launch season, a phase filled with new reward mechanisms, governance modules, and integrations that aim to put Sky firmly at the center of DeFi's next chapter. In the short term, Sky's roadmap is about accessibility and adoption. Integrating USDS into platforms like Aave, building liquidity incentives on Solana, and rolling out Sky token rewards are all designed to put USDS into the hands of more people. It's not just about creating another stablecoin, it's about embedding it into the very fabric of crypto's infrastructure, so that whether you're trading, lending, or saving, Sky is always part of the story. But what really sets Sky apart are its Sky Stars. These aren't just side projects or vanity experiments. They're designed as independent engines of growth, each with its own governance, treasury, and vision. If you think of Sky as the galaxy, the stars are the planets. Distinct, self-sustaining, but orbiting the same gravitational core. The first Sky Star, Spark, is already proving this model works. With billions locked in as a lending platform, Spark is both independent and deeply connected to the ecosystem. It shows what's possible when innovation isn't bottlenecked through one central authority but allowed to branch off and specialize. Future stars may focus on everything from derivatives to cross-chain infrastructure to niche financial products we haven't even imagined yet. This design decentralizes not just power, but creativity itself. And then there's SkyLink, one of the most ambitious parts of the roadmap. It's not enough to be strong on Ethereum alone. Users are demanding cheaper fees, faster settlement, and the ability to interact seamlessly across multiple blockchains. SkyLink aims to bridge Ethereum to layer 2s and beyond, extending the reach of USDS and SKY across ecosystems where cost and speed matter most. If successful, this could make Sky the connective tissue between DeFi platforms that currently feel fragmented and isolated. Looking further down the road, the vision becomes even bolder. We're talking about AI governance tools to enhance decision-making. We're talking about new stars emerging like startups within a decentralized incubator. We're talking about expanding across multiple chains until Sky isn't just one ecosystem among many. It's the infrastructure tying them together. But here's the heart of it. The long-term vision is not just about technology, it's about people. It's about making decentralized finance something that feels usable, approachable, and trustworthy for millions who don't yet know what DeFi even means. The renaming to Sky wasn't chosen lightly. It represents openness, limitlessness, a reminder that this movement has no ceiling if it's built with resilience and imagination. Of course, the roadmap isn't risk-free. Every milestone comes with its own uncertainties. Integrating into new blockchains brings technical complexity. Launching stars means managing governance across multiple autonomous entities. Expanding into regulated spaces invites scrutiny. But the roadmap itself reflects something MakerDAO once lacked: a willingness to evolve boldly instead of cautiously. The story of Sky's roadmap is really the story of expansion. Expansion of features, expansion of governance, expansion of community, expansion of imagination. Where MakerDAO once stood as a single pillar, Sky envisions itself as an entire constellation. And if the roadmap holds, it won't just be a rebrand. It will be proof that DeFi can grow, adapt, and reach further than even its earliest pioneers imagined. When we step back and look at the journey from MakerDAO to Sky, it's easy to see it as just another rebrand in the fast-moving world of crypto. But if you dig deeper, it's much more than that. It's a recognition that the world has changed since DAI first launched. Back then, MakerDAO was revolutionary simply for proving that a decentralized stablecoin could exist. But today, the stakes are higher. Billions of dollars flow through DeFi. Stablecoins have become the lifeblood of the ecosystem. And new generations of users are asking for tools that are not only secure, but also accessible, intuitive, and meaningful in their daily lives. Sky is an answer to that evolution. By turning DAI into USDS, by expanding governance through Sky, and by launching stars that can operate independently, the protocol is saying something profound. Decentralization is not a single product. It's a living ecosystem, one that must adapt to survive but also expand to inspire. Think about what this means for users. It's not just about staking or voting. It's about choice. The choice to participate in governance without needing to be a whale. The choice to earn yields without trusting opaque intermediaries. And yet the story of Sky is also about identity. MakerDAO carried the weight of history, of being first, of setting the rules for what DeFi could look like. Sky sheds some of that weight so it can move faster, adapt more freely, and welcome newcomers without the baggage of the past. In choosing the name Sky, the team chose a symbol of openness and potential. A reminder that while there may be turbulence ahead, the horizon is endless. But perhaps the most important takeaway is this. Sky is not the end of MakerDAO's story, it's the continuation of it. The principles that made MakerDAO revolutionary, decentralization, transparency, and resilience, are still alive here. They've just been reimagined for a world that's bigger, faster, and more demanding. Will Sky succeed? The truth is, nobody knows. The risks are real: regulatory battles, market volatility, competition from other protocols. But if history has taught us anything, it's that those who dare to reinvent themselves often outlast those who cling to the past. MakerDAO was once the pioneer. Now Sky is trying to be the pathfinder for a new era. So as we watch this ecosystem unfold, one thing becomes clear. This isn't just a story about a protocol or a token upgrade. It's about the bigger question that hangs over all of DeFi. Can we build systems that are not only decentralized and secure, but also inclusive, scalable, and human-centered? Sky doesn't claim to have all the answers, but it's willing to ask the right questions and, more importantly, to try. And maybe that's what makes it worth paying attention to. Because in a space where hype often outruns substance, Sky is at least attempting to build something with both. Something grounded in history, but unafraid to dream of the future. The sky, after all, isn't a limit. It's a reminder of how far we can go.